It's been about a month since Donald Trump upended global commerce with his Liberation Day tariff announcements. Since Liberation Day, Trump's tariff policy has been remarkably difficult to follow. He started off charging extremely high tariffs on almost all countries. This caused tremendous fear and panic in the financial markets. Within days, Trump backed down by announcing a 90-day pause on most of his tariffs with the notable exception of China. As of the time of recording this video, a massive 145% tariff has been levied on Chinese import. China has responded with retaliatory tariffs of 125%. When tariff rates get this high, they function as an effective embargo. It doesn't matter if it's 125%, 245%, or 1,000,000%. At these levels, almost no trade will be conducted, at least not on any significant scale. Given how frequently Trump changes the tariff policies, it's very difficult to keep track of them. By the time you're watching this video, the tariff situation may have already changed drastically. And that's part of the problem. Given how unpredictable the tariff situation has become, it's extremely difficult for companies to make long-term plans or investment decisions. This could have implications for the US dollar's position as a global reserve currency. For decades, the US dollar has been the primary currency used in international transactions. Foreign companies and central banks have thus been obliged to maintain massive stockpiles of US dollars. The United States has benefited tremendously from this arrangement. Foreigners have soaked up trillions of US dollars. This has allowed the US government to borrow a seemingly unlimited quantity of money without causing a debt crisis or out-of-control inflation. In the 1960s, France's finance minister Valéry Dustin famously said that the reserve currency status of the US dollar gives the United States an exorbitant privilege. However, unpredictability in America's economic and trade policies may put this exorbitant privilege at risk. If America retreats behind tariff walls and disengages from the world economy, why should foreigners continue to use the US dollar? These are very complicated topics. We recently had the privilege to interview Professor Kenneth Rogoff, who is one of the leading economists in the world in regard to these issues. Rogoff is an economics professor at Harvard, a former chief economist of the International Monetary Fund, and has advised numerous world leaders on economic matters. He is also a chess grandmaster. He recently published a book called Our Dollar, Your Problem, which discusses how the US dollar became the world's reserve currency and the risk that now faces. Throughout this video, Professor Rogoff will help us to understand his very complicated and important issues. The first issue we'll look at is America's level of public indebtedness. Currently, the national debt stands at $37 trillion, which is approximately 120% of GDP. As a percentage of GDP, this is the highest level of public indebtedness since the end of the Second World War. Level debt along with interest rates has caused the interest expense to skyrocket. In 2020-4, the U.S. government's interest expense was $881 billion. In 2020, it is expected to surpass $1 trillion for the first time ever. For comparison, this is larger than the entire defense budget. Many economists have dismissed the national debt as a non-issue. Former Federal Reserve Chairman Alan Greenspan famously made the following statement: "This is not an issue of king. The United States can pay any debt it has because we can always print money to do that." What Greenspan said is technically true, but in economics, there is no free lunch. Everything has consequences. Let's hear what Professor Rogoff has to say about the national debt. For years, many leading progressive economists, including Paul Krugman, Lauren Summers, and many others have argued that there is really very little cost to any advanced economy of having very high public debt. Certainly not in terms of future growth prospects. So the fact that the U.S. debt has ballooned to 120% of income compared to 60% before the financial crisis and 30% when Ronald Reagan was elected is of little consequence. You have disagreed. Why? Well, at the core of the disagreement is they believed that interest rates would keep getting lower and lower and lower and be so low that you never really need to pay attention to them. The government could just borrow whatever was doing. Interest comes to, no problem. You reborrow it. You refinance it. You never make a significant repayment. In fact, you keep on borrowing even more and they, said, well, why wouldn't that be fine? And I argue, look, if you view a longer time horizon, you are just looking at a few decades and interest rates adjusted for inflation, what we call real interest rates, did seem to be mostly trending down for more than 30 years, and they really dropped after the financial crisis. I think that's when they started to make this point most emphatically. To be clear, that you look at the 10-year U.S. inflation index bond, that's a measure of the real interest rate because it's the interest rate adjusted for inflation. They compensate you for inflation. It fell by 3.5% after the financial crisis. It fell off a cliff, but had they looked at longer horizons? I've looked at series. These things happen and interest rates go up, they go down, until they don't. And the idea that you could just look at this little window and extrapolate it, I thought was nonsense. Now that's a conceptual point, but let me just state the obvious. Right now, that is of the United States, is $36 trillion going on $37 trillion. Excuse me. 121% of our national income. Well, they say no big deal, doesn't really matter that much, doesn't affect growth that much, and at the same time these same people, if you ask how good is government stimulus, they'd say that's great. Now stimulus is when you borrow to do spending, and of course that's great. Debt is when you owe a lot, and that's a very basic difference. But if you haven't been taking economics recently, there's a difference in what's your credit card bill that's painful and what are you spending using your credit card. Right now that's fun, and the same thing with the government when they do stimulus, handing out checks like the government did in the pandemic, spending on infrastructure, which is good, or just spending on whatever the government wants to spend money on, that's good, and lets that from owing money. So, Keynesian and economists, I actually would include myself as a Keynesian economist, tend to believe being able to borrow to spend money is great. You can use it constructively. Sometimes governments mess up, but it's good, and if I were to ask any of them, I can look at their professional writings. If I asked them, well, what if the government can do more stimulus, another % of GDP, would that be good? They would say, well, yeah, it would add most times 1 or 2% to growth. Let's just register that. When they would say, when you spend, unless the economy is just booming, but if you're in a slight recession or you spend it in some constructive way, if you can borrow money to spend an extra 1 to 2%, it would add to your growth. And then, okay, so debt doesn't matter, but being able to borrow is great. So I've got this credit card bill, I don't really care what it is, I'm just going to keep borrowing. Let's say a debt fairy came and waved a magic wand over the U.S. debt, which is now 121% of GDP, $36 trillion, and suddenly it was $18 trillion and only 60% of GDP, and the debt fairy said, guess what? For the next 30 years, you can spend an extra 2% of debt finance spending, or for 60 years, 1%. I'm ignoring compound interest and such. They would, oh, that's fantastic. That's just great. We can grow so much faster, and that just sort of exposes the vacuousness of the position that you don't care. Now, they do if you push them. These are very smart people. If you push them, what they'd say was, oh, but wait, let's just do that now. We got 121%. Let's just spend more now. There's no upper limit. After that's almost what they believe, at least to be precise. Japan has a debt-to-income ratio twice that of the United States. Why not go there? By the way, the short answer to that is Japan's growth has fallen off a cliff the last 30 or 40 years. But that's what they would say. But the thing is, you don't know when it's going to start to hurt. I think there's already a very strong argument that interest rates that we have to pay have been up as the debt goes up. That's in fact the interest payments on U.S. debt have more than doubled over the last few years as interest rates have gone up. So, it's not a free lunch. There's what economists would call an option value. You want to be able to borrow on a rainy day, and you want to borrow confidently and borrow a lot when you have a big pandemic financial crisis, maybe in the future of cyber war. So, this somehow vacuous idea that debt was almost irrelevant but borrowing was great. It's all predicated on debt can go to the moon, and well, I think President Biden proved that it couldn't. So, I think a lot of the world, I've been sort of a lone voice in the wilderness on this point for a very long time. I've debated them all and on around the world many times. I think a lot of people are coming around to the view that, well, maybe not a free lunch, and if I could just say one more, it's just very important point. I think the problem progressives have more generally has been underscored in a recent book by Ezra Klein, The New York Times. It's called Abundance, and I'm here to advertise my book, but I want to mention that I don't love everything about it. I don't want to overstate it. But it says, progressives just have to get trade-offs. Saving little, dark snailfish. That's really important. Means that Los Angeles is going to burn down because you didn't allow water to flow to the south. Not such a great idea, and you can go on and on. This is an example of that. Borrowing, good. Debt, bad. Need to the trade-offs, and the progressives just didn't want to. I mean, most famously, Ocasio-Cortez embraced this idea that we could pay for her Green New Deal just by borrowing, and of course the higher interest rates, the inflation we had. It's been very sobering, and I think as my book comes out, a lot of the world sort of come over to this point of view, but it was all there. The debt doesn't go away. When your debt's really high, it doesn't go down overnight, and interest rates can change really fast. So, I don't know how this is all going to end, but the idea that it's a free lunch and something you just shouldn't care about was always nonsense. This chart shows the yield on inflation index 10-year U.S. government bonds. This represents the so-called real yield, the interest rate the government can borrow at minus inflation. Prior to the 2008 global financial crisis, the real 10-year interest rate was approximately 2%. The global financial crisis and the resulting Great Recession caused a decrease in demand both from consumers and for business investment. The decreased demand for capital caused real interest rates to fall, briefly turning negative in 2012 and 2013. Throughout the second half of the 2010s, real interest rates stayed at very low levels, rarely exceeding 1%. During this period, the debt was not viewed as a big problem. Because interest rates were so low, a large amount of debt accrues a relatively low interest expense. Also, if the economy is growing faster than the real interest rate, the debt to GDP ratio won't get out of control even if the government borrows a lot of money. Let's go back to the debt to GDP chart. Immediately following the global financial crisis, the national debt indeed increased from 60% of GDP up to 100%. This was due to various stimulus programs. During the period from 2013 through 2019, the debt to GDP ratio stayed relatively stable despite the government continuing to rack up large budget deficits. This is because GDP was growing and the debt wasn't growing that fast because the interest rates were so low. Professor Rogoff argues that the relatively benign period of the 2010s was a historical anomaly. Today, the 10-year real interest rate has risen to approximately 2%. While this is not terribly high by historical standards, it's much higher than what it was during the 2010s. Rogoff argues that as the U.S. government borrows more and more, the increased supply of government bonds causes yields to eventually rise. Based on supply and demand. If interest rates stay high and the government continues to run large deficits, this could cause the debt to GDP ratio to spiral out of control. Historically, the inflationary impact of large budget deficits was mitigated by the U.S. dollar status as the world reserve currency. Foreign companies and governments were obliged to maintain stockpiles of U.S. dollars to facilitate their international trade. Much of these U.S. dollars are invested in U.S. Treasury bonds. Today, foreigners own approximately $8.5 trillion of U.S. government debt. Foreign demand for U.S. government debt has kept U.S. inflation and interest rates lower than they otherwise would be. If the U.S. dollar loses its reserve currency status, America's exorbitant privilege could disappear. So the next issue we'll look at is Trump's tariff policy and its implications for the U.S. dollar. As of the time of recording this video, it's been about 1 month since Trump's Liberation Day. Trump quickly watered down the tariffs, so the impact on the U.S. consumer has not been nearly as bad as many had initially feared. Here's a quick summary of where we stand now. Firstly, there's a 10% tariff on all goods imported into the U.S. This has already taken effect and has not been changed. Secondly, there were the so-called reciprocal tariffs targeting almost every country in the world. Trump paused these tariffs for 90 days pending negotiations. The 90-day pause will expire in July. However, there is one major exception. Tariffs on China were not paused. The U.S. imposed an eye-popping 145% tariff rate against China. This includes a 125% reciprocal tariff plus a 20% tariff related to China's alleged involvement in the fentanyl supply chain. China retaliated with 125% tariffs against U.S. goods. When you have tariffs above 100%, this is effectively an embargo, as almost no trade can realistically happen at these levels. Given how much the U.S. imports from China, cutting all this off would cause huge disruptions for businesses and consumers. To mitigate this, Trump exempted most electronic devices, including smartphones, computers, televisions, networking equipments, storage devices, from the China tariffs. While these are exempt from the 125% reciprocal tariff, they are still subject to the 20% fentanyl tariffs. The tariffs are already starting to have a significant effect on trade. The Port of Los Angeles said it expects a decline in the volume in the first week of May. This decrease can be almost equal to the China tariffs. However, in the medium term, it might be bad as these numbers suggest. If we look at the nature of U.S. imports from China, a very significant proportion is covered by the electronics exemption, about 30. While China had a large trade surplus with the U.S., they still imported about $150 billion of U.S. goods each year. A large portion of this consists of energy and agricultural commodities, which can be relatively easily sourced from other countries. The biggest impact will be felt by things like clothing, toys, plastic trinkets, etc. These imports are now effectively cut off. Basically the type of stuff you'd buy on Temu. While there will be some short-term disruption, this probably won't have a huge impact in the medium to long term. Low-end goods like clothing and toys can pretty easily be sourced from other countries like Vietnam or Bangladesh. In fact, this is already starting to happen. According to data compiled by the Financial Times, the cost of shipping from Shanghai to Long Beach, California has tanked in recent weeks. This coincided with a symmetrical increase in the price of shipping from Saigon to California. Saigon is a major port city in Vietnam. This indicates that U.S. importers are canceling their orders from China and them with orders from Vietnam. As the deadline for the 90-day pause ticks away, the Trump administration is trying to negotiate bilateral trade deals with dozens of different countries. It's very difficult to predict whether or not these trade negotiations will be successful. So it's anyone's guess what will happen come July. Professor Rogoff argues that the confusing and unpredictable nature of Trump's tariff policies could be just as economically damaging as the tariffs themselves. So let's back up a second and suppose he had just put in 10% tariff on everybody with no theater, no uncertainty. How bad would that be? And it might surprise you, but I think specialists who work on this problem, people who work on international trade, quantitative international trade models, have come to the conclusion it's not great if I added 5% to the sales tax everywhere. That wouldn't be great. It wouldn't be good for businesses. It wouldn't be good for consumers. That's not the end of the world. States add to their sales tax all the time. It's not the end of the world. It's not great to have a tax hike, but he could have cut other taxes, and I think the Trump administration could very reasonably have said, look at the whole package and then judge us. Don't just judge us this way. But that, as you said very clearly, James, that's not what he's doing. It's this: let's make a deal, and I wish I believed it's just going to come down to 10% for everybody and stay there. That seems like a process that'll take a long time. And B, do you really believe he won't do it again? He's shown how meteoric he is as a personality. He gets mad at somebody, slaps a tariff. So, that has been very disruptive. Let's go back to the tax. Imagine that the governor of your state, New York, Kathy Hotel, says that we're going to add 5%. Well, let's make it 10% to the sales tax. You're choking over it. It's terrible. Everybody is, and then she says, no, I can't decide between 20 and 3. I'll let you know in 90 days which it is, and goes on and on like this. Would you know how to time your purchases? If you were a business, would you know if you should invest? Should you hire poor employees? No, it's nuts. It's very hard to plan anything. On Liberation Day, Trump effectively declared a trade war on the entire world. But at least for now, it looks like he's narrowing his focus on China specifically. While the tariffs against other countries are purely economic in motivation, the China tariff should be viewed as part of a broader geopolitical conflict between the two countries. Let's hear what Professor Rogoff has to say about U.S.-China relations. Okay, there's a real argument for taking on China. And I think in his first term, there were many people who anything Trump did was wrong. And by the way, although I had many criticism of his policies, I would say that, for example, my students who would say that, let's see, if I give you a multiple choice test and you get every question wrong, you must have known the answers. He must be a genius to be wrong on every question, and he's not. And I think on China, even though everyone who ever agreed with him got canceled, at least by the left, many people would quietly admit, boy, it's about time somebody thought about that. We used to think as they got rich they would become more democratic, and doesn't seem to be happening. So I think in his first term there was some support for that idea. And of course Biden tried in many ways to sort of pursue that. Not nearly as aggressively. Well, here I think the big concern, the really immediate concerns, much more than China overtaking us, which I think is less than it used to be. My book talks a lot about that, but China's having ambitions within its neighbors, Taiwan most immediately, but also the Philippines Islands and Japan, and at least the people I talk to who are foreign policy scholars, people who I think are pretty connected at the highest levels in Washington, believe that the possibility of China making a rather aggressive move sometime over really the next 2 or 3 years on Taiwan are very, very high. If you believe that that's a high risk, and I think you ask a lot of policy experts and they'll say, you'll see estimates all over the place, but I think mostly over 50% at this point, then in a way Trump is preemptively striking, and moreover he's striking when they're down, their economies in recession, they overbuilt in housing, overbuilt in real estate, and I don't believe numbers at all right now that they're growing at 5%. I just don't believe it at all. So if I was to think of some way where he comes out looking like a genius out of all of this, and I'm not saying he's going to, I'm skeptical. That would be it. On the other hand, could work the other way. Why isn't China going after Taiwan? They're not afraid of our military. I think they don't believe Americans have the stomach to really go toe-to-toe with Taiwan, toe-to-toe with China. The Chinese care more they have a dictator who can force if they lose 1 million people they'll just keep moving. We've seen that in Russia, you'll see it again in China. If they have to, they fear a trade war. They fear what we're doing. Well, if we have the trade war and they only have, I don't know, something like 15% of their exports go to the United States and they manage, and we've shown that it's not so bad, then we don't have any threat anymore. So it is an interesting question. I don't know if this is what's in his mind, though. Trump does point at everything he wants. Panama, he wants Greenland. He says, I won't defend you if you don't close up your trade surplus with us. I don't think he's read the recent literature on geoeconomics, but he sort of spews it when he talks. I don't know what's going on. I think we will await. I'm an American. I want him to get lucky, but from what I can see, this is the dumbest policy I've seen in my 50 years of being a professional economist. I think many of Trump's policies, forgetting the social side of it, many spectacularly unattractive things about him. Famous economic policies from Trump. One worked. This one, I believe he will definitively show, does not work. I think the sooner he were to get rid of his trade advisors, the better, but we'll see. The Chinese economy will indeed be hit hard by the tariffs. There are already reports that factories in China have stopped production and are scrambling to find alternative markets, but if you're worried about China's potential military ambitions, it's unclear that this will have any effect. It may even backfire. Excess capacity in civilian industries may encourage the Chinese government to accelerate its military build-up. Tariffs and sanctions are not effective ways to hamper military production. For example, RA is almost completely cut off from trading with the US or Europe. This hasn't stopped them from massively increasing military production. Normally, when a country implements tariffs, it causes the exchange rate of their currency to appreciate. Reduction of imports. To pay for imports, you need to exchange your home currency for your home currency of what you're importing from. Fewer imports means less selling of the domestic currency. All else being equal, this should cause a domestic currency to appreciate. And following Trump's Liberation Day, we actually saw the opposite. US dollar index tracks the exchange rate of the US dollar versus a basket of international currencies. During the month of April, the US dollar index depreciated by approximately 4%. Let's see what Professor Rogoff has to say about this. The rest of the world has a lot of money invested in America. United States. Its stock market, US Treasury bonds, US mortgages, houses. It has a lot of money invested in US. In fact, it's a big net creditor. The United States is a big net debtor to the rest of the world in the tens of trillions, and they're looking at Donald Trump, who doesn't seem to care about the rule of law. He's willing on tariffs. How do I know? Not going to put on taxes to foreign holders of U.S. assets. Actually, if you dig deep into the White House, there's a paper floating around. It's all over Wall Street, and even some of Wall Street millennials may have heard about it, called the Mar-a-Lago Agreement. It's an agreement is placed in Florida, and it's a blueprint to try to force the world to use the dollar. One aspect, not something not to you need to read the fine print, is that if you're the Chinese who or any foreign central bank or sovereign wealth fund, they hold a lot of dollars too, and you're holding U.S. Treasury bills, we're going to take them from you. Most of the Treasury bills they hold are pretty short-term debt, by the way. They're not holding so much long-term debt. We're going to take them goodbye and give you 100-year bonds. We're going to pick the interest rate on the 100-year bonds, and they're not going to be convertible. You can't trade them. That's in the moral law. That default. Obviously, if you're your company and you've issued debt to a bunch of banks and creditors, and the company says, I don't want to pay you right now, I'm going to give you these 0-year bonds. It's obviously a default. So I think people didn't take that kind of thing seriously, and then suddenly he's willing to do this, which seems so reckless. I think most of the world thinks that his tariff policy is deeply misguided and a lose-lose for all. How do I know he won't do other things? Let's say I'm a Japanese automaker and these automatic employ more workers in the United States than all the American companies. I'm a Japanese maker. How do I going to start putting on restrictions, taxes on me, or I'm holding stock or anything, and I think there was a loss of trust. I don't want to overstate it. Farters are still holding a lot, but I think they added a bit of a premium, or to be more precise, they took away some of our privilege. We have been paying a lower interest rate than we would otherwise, and it jumped up 0.5%, and I think that's also the catalyst. But the case of the exchange rate, I think this was going to happen anyway if foreign governments and businesses lose confidence in the US dollar. What implications will this have on the US economy? Let's ask Professor Rogoff these challenges, which came before Donald Trump undermining a Federal Reserve independence that both parties have been pushing budget deficits that, at least in my opinion, and I think a lot of the market's opinion, are out of control. These are things which you pull back a little bit on how much you're holding a dollar, so you're not necessarily rushing everything into Europe. Could turn into the ruble if you're unlucky there. I'm being sarcastic, but making a point. You could go to China. Well, they might steal your money, you don't know, but it erodes, and so as it erodes, what's the cost? Well, there are two costs. One is you lose some of your what we call exorbitant privilege. You right now do almost all U.S. assets, but particularly public debt, but corporate debt too, probably pays 0.5% or 1% less than it would if the dollar wasn't the epicenter of everything. So, it's probably going to go up some. The second point, which is more subtle but maybe even more important, is the national security point, which is that a lot of our spying, a lot of our ability to impose sanctions come not just from the dollar being first, but the dollar being overwhelmingly first. There's just no other way to do things. There's no other way to do business. Well, as the RMB starts to develop its own financial network, it's not just about having a currency, it's about having a financial network, as frankly cryptocurrencies get to be expensive but possible to use as an alternative. Then that erodes the US's ability not only to impose sanctions but to see what's going on. If you were to visit the CIA when I was your age, they'd be reading all sorts of books and magazines and there'd be a lot of agents in the field and stuff going on. A lot of great movies. Nowadays, a lot of spycraft is cyber. Just trying to find electronic blue. You well know that. And a lot of that is the financial system. What is the US? These just seem to be so ahead of everybody else. It's because a lot of the finance through. The whole global financial system touches the United States. At some point, can see things the world doesn't want us to see, and they're moving away from that. There's a national security, and there's also, an interest cost that comes from this, and again, it's when I wrote my book, I finished the last pages. The last time I had to do page roofs was the day after the election. I was saying we were going in this direction. I certainly said what would happen if Trump won, but I think if Harris won, same thing, we'd be different set of problems, different person, a lot nicer person obviously, but not necessarily a different set of problems. So I think there in your answer you mentioned cryptocurrencies, right, and as if trust in the US dollar decreases, and I think as you pointed out, other than the US dollars there aren't that many good options for a reserve currency. Yeah, you could use like the Chinese RMB, but there's risks with that, so there's no perfect alternative to the US dollar. And that one thing that some people talk about is Bitcoin or other crypto, and I think one thing that's really interesting is if you look at Trump, his evolution on crypto, I think it was as late as 2021 he was saying Bitcoin is a scam. It's a scam against the US dollar. I don't like Bitcoin because I want people just use the US dollar, but now his tune has changed and he's pro-Bitcoin, and he even did this Bitcoin strategic reserve. So I would be curious about your view on Bitcoin. It's obviously a very controversial topic, and a lot of people, including very famous people like J.P. Morgan CEO Jamie Dimon, Paul Krugman, is also very respected. Economists say that the Bitcoin is ultimately worthless, but then you have other people, and this is a view held by a lot of the kind of tech people and Silicon Valley people, is that Bitcoin, money is just a social A social convention, so there's no reason that we couldn't use Bitcoin just like we use any other currency, and I just wonder where you come down on this debate, especially in the context of the US dollar's reserve status may be coming into question. They're both wildly wrong. Both sides are just totally wrong. So let me start with why the idea that it's worthless is totally wrong. That has to be wrong because I don't think Bitcoin ever be a major feature of, let's say, the legal economy and transactions and major financial institutions. I will come to explain why. But the underground economy is enormous. It's 20% of the global economy, at least according to my work and many others. It's a $25 trillion economy. Now the underground economy, what is it? Of course, it includes illicit drug, it includes arms trafficking, it includes human trafficking, it includes, standard mafia type stuff, but that's not the main part of the global underground economy. The main part of the global underground economy is ordinary people doing or businesses doing ordinary things, but not wanting to pay taxes, and that's a thing in the United States. As you go into Europe, it's an even bigger thing in advanced economies as a whole. I think, let's say, a little under 20% of the economy is this underground economy. In emerging markets, India, Brazil is much larger, and maybe 35% of the economy that creates a big permanent demand for other ways to do business. And I think right now Bitcoin, to be more precise, derivatives of Bitcoin, not necessarily Bitcoin itself, is absolutely being used for transaction. Example of that in between legal and illegal, depending on how you want to look at it, is we have sanctions on Russia. Nobody's supposed to be able to trade with Russia. Everybody is trading with Russia except the United States and Europe, and we're trying to hunt them down and track them down. Some countries were just afraid to enforce sanctions on, like Turkey, because it's just too geopolitically important, but there are other countries that are absolutely using various kind of cryptocurrencies to do transactions. I would say it in the book, but I feel fairly confident that a good amount of transactions between China and Russia are taking place with stable points like Tether, because the US authorities just don't control it, and that's just there. It's not worthless. They can be used for transactions. So the idea that it's worthless, I think somebody who hasn't lived life might say that and not aware that there's tax evasion and other things going on. So cash is still used. It's not that crypto takes over the whole business, but to think that it's going to be worthless, you have to think somehow Big Brother is going to just know everything everybody's doing. I don't think we're getting there, but let me take the other side, which you quoted what a lot of the tech community says, which is money is just a social convention. We can just use it. Well, there's like a big mistake there, and the big is, yes, it's a social convention, but the government has enormous leverage over what gets used. The government can first of all pay its employees, its contractors, and its currency. Most governments do. It can insist that the banking system use its currency. It can insist your taxes are in its currency. This is already, by having the start, gives the government a lot of network effect advantages over any other currency. This go farther than that. It can ban the use of competing currencies. Now, there's a variety of approaches different governments have to that, but when Marco Polo visited Kublai, the grandson of Genghis Khan, in the 1270s, it's in Marco Polo's book. His most famous chapter was about alchemy, that Kublai Khan has this stuff. It was an early paper currency made of tree bark, but it was paper currency and people take it just like it's gold. He said, it's alchemy. What's going on? And of course, it was a social convention, but it's also true if you didn't take it, as Marco Polo noted, it could be on pain of death that you didn't take it. So, your currency used, and similarly today the government has a lot of levers, and people in most developing countries, they would rather use the dollar. Forget about Bitcoin, they would rather use the dollar. They would rather hold dollars that hold their local currency for a million reasons. Why can't they? Well, they can to some extent in some countries, but largely because the government has all these levers. And then I'm going to narrow into Trump a little bit more. One of the reasons that makes Bitcoin valuable is that there's a whole banking system built around it. Coinbase is maybe the most famous example, but there are many others, and in fact, if you look at what percent of transactions, and I'm speaking of transactions, I don't know the holdings, but on 1% of transactions are done through the banking system and not on chain when you hold Bitcoin. You have a Bitcoin wallet. I give it from my to your wall. That's a Bitcoin transaction. That's what the first thing, everything when studies. That's actually not how most people do things. Most people do things through, I'm calling it a bank. This whole infrastructure around Bitcoins are wrapped in language to make it sound very safe and special. It's not, it's a bank, and it can absolutely be regulated. And if you regulate it, and I think you have to regulate it, so that information is shared and it's auditable just like a regular banking system, it would incredibly undermine the usage. I mean, that's a prediction. I could be wrong, but I think would undermine the usage of it a lot. One of the things that drove the price of Bitcoin up is Trump said none of that SEC, don't you dare. And 2021 Trump smart. He was right about what he was saying. 2025 Trump, well, the opposite of that. He was, of course, got a lot of money from the crypto sector. So did Harris, and he's paying them off. But as soon as we have a financial crisis, and I'm not talking about the one like FTX, and my book goes into my engagement with Samuel Bankman-Fried, or non-engagement. We were supposed to be on a TV show together, which he backed out of at the last minute, but I met him later. No, when we have a financial crisis that spills over into the real economy, and now that Trump says pension funds can hold it, insurance companies, and believe you me, if we haven't done an about face on the regulation, it's going to be very up, then we will regulate it. So I don't think either extreme is right. The one, it's just a social convention. Book by Yuval Noah Harari about the where his most famous chat in the tech community is drunk with that idea. It's wrong. There had been errors about this 20 years of math that was very elegant. They were wrong. The government has a lot of control. So the people say it's a new money. That's nuts. But so is the view that it's worthless. That's naive. Underground is enormous, and it provides fuel to that, and therefore has fundamental. All right, Rogoff. So we've gone through a lot in our conversation today. These are big issues that, there's way more to talk. We could just, talk about in one interview, which is why I want to give you an opportunity to your upcoming our dollar, your problem, which delves into a lot of these issues talking, the U.S. dollar's reserve currency status and threats to the dollar's crypto, the Chinese RMB, and others, as well as potential risks of financial instability, both domestically and global. To wrap up here, could you share maybe the 3 most crucial insights from your book that help read better understand the current and future landscape of the global economy? Well, gives a history of dominant currencies and the rise of the dollar, and I bring in, it's not more, but I bring in anecdotes from my life, because there are times I spoke with central bankers, world ministers, former students, chess players, and I try to use that to kind of motivate. I think most people in a world where they just sort of see what happened a year ago and what's happening today and don't realize that what goes around comes around, and I think the book gives you a flavor of that. My research has always emphasized you need to look at really long time periods, both with data and in terms of episodes and understanding, and so the book tries to bring that perspective. I have calls in it that I've made over the years that people thought I was way wrong. I thought I was not going to grow to the moon, and I had very good research showing why. Everybody said I was wrong. I think I'll prove right and have proven right. I said that inflation would come back someday. I've mentioned my paper from 20 years ago. Well, I think it did. I said real interest rate back, and in many of these things, I've been very isolated until I wasn't. I've been taking risks. I've said that debt is not a free lunch, which was not a popular view. But it's sort of looking that way now. And the call that I made, which was sort of the most out there when I finished the book, was that things don't last forever. Dominant currencies. You got a century. You got a cent and a half. But if you look at history, the U.S. been around the dollar's been for maybe a late middle age, and it's vulnerable, and I gave reasons why it was I anticipated. I really hadn't. That is, I didn't know Donald Trump would win. I thought we'd have that problem even if Harris won, absolutely just as much if Harris won, but I didn't know Trump would be making this happen in real time. That wasn't something I guessed, but I think the book gives you on these things and makes you think about when you're seeing some market trend or you're buying into something the central bank is saying, to have a little bit more of a detached view, have a little bit longer perspective. I think that's a very important for young millennial traders to, step back, because if you want to catch the big changes, and that is what's right now, by the way. We're seeing the biggest thing at least since 1971 when Nixon went off the dollar, and that's when the title comes from your dollar, you're our dollar, your problem. When you want to understand these big changes that really are what matter for your portfolio in the long run, you need to have a little bit of perspective. I mean, just like I think every day everybody should spend 15 minutes meeting with themselves, thinking about their life and just stepping back instead of rushing from one thing to another. I'm a big believer in that. I think every millennial investor should spend a little bit of time once in opening back and say, what do I really think? Where are we? If I step back from things, and I think the book gives you an opportunity to do that in a way that I hope is engaging. I did my best. Some people have told me, met many of the early readers, but we'll see. But anyway, I hope you read it, and that many of your viewers, find that it helps them think about the world that they hadn't before.